Good morning, class. Welcome to Homeroom with Unc and Market Monk.
Good morning, P. How's your week?
It was good. I had some weekend holds on crypto stuff that worked out, and dumped that pretty early. Just it wasn't no follow through there, and that's kind of been a theme with a lot of stuff. Just pop and fade or 3-2 market, what we've been calling it. So you just have to. I trade smaller and shorter duration lately, mostly. But yeah, good week. Good week overall. A couple of good ones in the ER room too.
Nice. Yeah, it's the selling slowed down on my side a little bit. I don't really post too many videos, especially from Kramer, but that cash video was perfect timing. Um, if I'm trading right now, it's definitely day trading off levels. It's taking those it's level bounces. Almost feels like the market we started in, where you're definitely not hanging out too long in individual names that are on levels if you don't have the flow kick in, or you don't see news coming. So still a little phrase from you, a little closer to the vest on my side. But
Yeah.
the overall picture, the selling slowed down a little bit. Again, I like to be early, so I did get out a lot of things early, and a couple buys across the board, to be honest, on stuff that I think is it's just not oversold, but just gonna make a higher low that I have a longer thesis in. So um, said it last week though, man. If you're just starting, like, hey, March 1st, I'm taking this serious. It's rough out there for anybody just jumping right into the water.
Yeah, if you want to see a good example of do it, not through it, that I talk about with levels, pivots cut both ways, and LLY has had some great momentum of late, but hit this pivot at 920 and just couldn't hold it, just gave it all up Friday. A big pullback there. Still a relevant level, probably be retested, but if you're swinging options in that, almost a 5% drop in a day, that's going to take a big chunk out of it. So it's not the environment for that. It's really it's all about day trading. I mean, even if you had, you know, I don't know, 1,000 C 2 months from now, um, that's a massive chunk of that. So you can't really you can't swing options right now in a lot of stuff. I don't think it really has much appeal. And and on that note too, I mean, when people are asking about um, setups and our stuff, I get it why options come up because that's what I read and that's what the setups are. But if you're in shares on something and I'm in shares on something and someone has options in it, I don't care how long the expiration is. We're not in the same trade. It's a different trade, and it's okay to do that. I mean, there are there might be a stock I wouldn't really care to buy options on, but if you get close to the money, you're in the money, and you have enough time, it's fine. But you're still under more of a time crunch in that there is one than if you just had shares. So um, I I say the same thing about expirations. If someone I post a note and you know I'm like, well, no more than $10 out of the money. If you go $30 out of the money, you're in a different trade because it doesn't matter that the underlying is going to do what I think it's going to do. The premium on that contract isn't probably going to move in the same way, and it's going to lose value a lot faster. So by saving money, you're amplifying risk, and that is a theme with trading when it comes to options. So people always should be aware that watch listing contracts is the best way to see how that
Yeah,
works,
yeah.
and it's better than losing your own money to learn that.
Yeah, that's the one thing I do that if it's anything option relevant is that watch listing contracts. Um, and I don't do it as much as I used to, but it's a great way to follow the full play if we're on to something.
Yeah.
And um, it's funny that you're the way that you've kind of pivoted um, on the option side. That on the share side, like I planted more flags last week than I normally would in a month. Um, but I was also just taking the dimes. So as quick as I'm in,
Yeah.
I'm out, and trying to scale in even a little bit right now. Um, you better have an overall thesis. You better have the three bars, or the 3 day rule, as I like to call it, where you just get some comfort, a little bit more confirmation. Um, but I noticed myself, I do pivot to, all right, let's plant a flag, but let's just go with the original Unk way to trade. It's if it was 1,000 shares, those flag plants are like 200 shares, and then I'm just taking my
Yeah.
my 2 or 3 dimes, and I can re-enter. That's probably stands out a little bit more. And I'm just looking for that level bounce. But yeah, it's close to the vest, like I said a minute ago. It's just what you have to do right now, and I would go a little bit farther this week, P. Than it's not just consolidation. There is some pullback in a lot
Yeah.
of names,
Yeah.
and we didn't have that in the start of it. Outside of SPY, I mean, we did talk SPY. It'd be healthy if SPY touched the 50, which we'll talk about here probably in a little bit. But overall, I mean, you have to. We always talk about market conditions and stuff, and this is a condition, and it's not your normal stuff that worked for even the last 7 8 months. Probably get you killed right now. So it's better to go back to the one at a time, or just taking profits pretty early. And reasonable expectations is what I see a lot. I mean, if you had any position in the last 2 weeks that was up 50 to 100% share side, and you haven't been taking profit and just kind of, oh, it'll be okay, not going to be good for you. And you're just going to give back, maybe whether it's 3 weeks or 3 months. You're going to give it all back. So scaling in, scaling out, definitely bigger on the longer swings. And then if you're short term trading or trying to enter something right now, better just to start off a little smaller, in my opinion.
Yeah, absolutely. And yeah, just a quick example of you know shares versus options and what I was talking about. So I've been on on Enphase a lot
Yeah.
and trade it all the time. And the thing about this was I was like on I was like near 60, like I just want an average, near under 60. And I was buying June contracts and shares there. Um, the June contracts got pretty uncomfortable on that drop, under 60. Shares, I kept adding. I don't average down options, and I had a number in mind where I was like, I'm just going to cut these. I don't have a lot of them, but the point was with the shares, I really had no issue or concern. Didn't really think about it. Added a few times. Um, just the you know, RSI just completely in the ditch. 4 hour. I don't trade on RSI. I was fine adding some more there, but I don't like to average down options because it's like, well, I was wrong here. I'm not going to compound that mistake. I'm not going to cut them yet because it's still okay on the calendar and all that. But yeah, I mean, I found myself saying like, I kind of wish I wouldn't have bothered with the options on this one. And I've learned that with Elf a couple times, and some others where I just don't really like swinging those. It just adds an unnecessary complication. So I'd rather you know size appropriately or size up a little bit on shares, and you can weather something like that. Well, Enphase back over 60, doing something it used to do where SPY sells off, Enphase goes up, and it's still pretty heavily oversold. So yeah, that again, I mean, I learned things too. I'd rather just have shares, and probably just going to stick with that on this one for a while, unless it's a planned day trade off a bounce. But we're below all my levels, so that's another thing. If if you're below, like well below a pivot, the pivot's not relevant that day or in a couple days. Um, Options get more dicey. That's something that about these setups I found as well.
Oh, you have a 4 hour there?
Yeah.
Yeah, I mean, you got a solid 3 rejections. 2 of them didn't even make it. That's got to be a sign to you guys.
Yeah. Right.
It
Yeah.
really does. I like the bounce back. I used to call these backside trades. Like you're in a downtrend, you're gonna get some relief. You're gonna have a higher low and a lower low. That range
Yeah.
is tradable. Even here, I mean,
Right.
if you just take my simple way of trading, buy 100 shares there at that 51, 52, and or 53 even, and you're selling them at the 60 test. That's a great trade.
Yep.
It really is a great trade,
Yeah.
but you have to have that mentality that I'm filling the cup over and over again, and that will not only kind of, I won't say save you, but that will make you a profitable trader no matter the market. Even the good stuff right now. I mean, I've table pounders for me, um, and then ones that I think will still have some continue, maybe a little bit different. But Bud, I got asked,
Yeah.
it made 60, and it was like, is this was where we take profit? And I was like, no, that's just center mass for me. But I mean, that's going completely against the market. And then the same with the gold, GOLD, the same thing with that stock. Um, we're just sitting on my top 18 level. So I mean, I have a plan there. But when you have stocks that go against the grain, um, you kind of start to focus on there, and hopefully most people got a piece of this guy. Um, but
Yeah.
it's almost it wasn't luck that those 2 or 3 names were on my list, and then the other one that's on there is AG, which is just, it tests $6 all the time, so you can just buy it in the fives. But um, yeah, you just learn little things as you go, and then obviously I hound you about where the flow's at. So if you are getting washed around, so to speak, you got to just find stuff going against the grain currently, and there's plenty of that. There really is. It's back to it not being sexy. Um, and,
Oh yeah. I mean, it's a lot of it's consumer staples making 52-week highs, and
yeah,
that is your traditional flight to safety um, move that they do, where when the market pulls back, they don't just pile into shorts on tech or anything like that. But they do. You get that sector rotation. Gold and silver. We've been on that for a long time. There was a statement I read on Twitter, and one of those things that someone says that is technically true, but misses a lot, and that was to say Tesla has gone nowhere in 5 years, meaning that it's the same price it was 5 years ago.
cool,
Um,
cool story.
right. So what does that? I mean, what does that mean from your perspective? What has Tesla done in 5 years? That'd be my question.
Offered a great entry.
Yeah,
Offered. I mean, I have
several
the
times.
timestamps on it. I have the levels on it. I mean, it's for me. Tesla's hard, P, because we talk about grad school trades, right? And the same,
Yeah.
I think the same kind of applies with Nvidia. If you have some substance behind it, if you know the history of it, it's a freshman trade. I'm sorry, it really is. And I mean, why
Yeah.
I say that with Tesla is I mean, I can bring the chart up, but we all know the levels. It was $100. It was 139, and then it's 184, I believe, 184.60 something. It's right there. You get 80% range, like that thing moves 80%, and you can still buy it and be okay. Like I
Yeah.
don't know what else you need. So um, that kind of to me is the 5 year thing you talked about. That's kind of the bearish version of, if you put 10K in this stock 10 years ago, what would it be worth? That's just
Oh, right.
you
Right.
pick a
Yeah.
time frame, and you look at it, and it's back to it's back to neutral or whatever from that. And where we were 5 years ago, yeah, Tesla was doing what it does. It has extreme range. It goes through ups and downs, and a big part of that is expectations. It's another reason I love Tesla is when you get into what the market wants. Obviously it's big on deliveries there. It's just easy to follow. Same with like Roblox. It's just easy to follow what the market's going to react to. It doesn't change a
Yeah.
lot. And um, yeah, so I think you're cherry picking there a little bit if that 5 year
Yeah. Yeah.
part versus um, looking at it the proper way. And Tesla in the last 5 years has offered a generational entry, and it was $100. And hopefully most people got into that. We're only 2 years.
But
I'll,
right.
I'll look at it the other way, P. I said if you're going to be a Tesla owner, I think it was for 3 to 5 years. This is where you buy. So if you just had the right
Yeah.
headspace, um, yeah, yeah. No reason for anyone to like kind of take that Tesla is in a bad spot or a failing stock, because that's so false.
Right. And I mean, it's not, it's not investing in the S&P, and it's not, I mean, even, I don't know, stocks like Waste Management or Casey, that have just hit the weekly and just keep, and keep going up. I mean, those are great to be in, but they don't offer those re-entries, and for trading, it's that range and all that you want. And that kind of comment about Tesla being flat for 5 years, it's the same thing as, so take Peloton. All right, if you put 10,000 in at the very top, it's worth whatever, $30 or something. It's I mean, that's cute, content or whatever, but it's not really that relevant to trading or even investing. And a lot of those stocks, I love those stocks that people hate like that, because the range from down here, the way that they build levels, we've done great on Peloton.
Yeah,
You can say Peloton's a
twice,
disaster as a stock,
twice.
but yeah, exactly. I mean, but it's been good for us. And those stocks that become a punchline, um, Lemonade, hell, Root. Gosh, I mean, um, ones like that. Carvana was
Yeah,
the perfect example.
yeah.
I mean, people bash Carvana constantly
Can we
back when we
throw can we
first got
throw
on it.
Rocket Lab in there? Can we throw CLSK in there?
Yeah, exactly. Right,
I
right.
mean,
Yeah, yeah.
we don't have enough time.
Right, right.
um,
So
hey, real quick, P,
that
just
I mean,
real quick. I
go
hate to
ahead.
interrupt you, but did that post say 5 years ago?
I believe so. Yeah.
Okay, well, 5 years ago, Tesla was $50 before three or two reverse splits. So that post,
So they
they
were
didn't even do
even
their
they
math
weren't
right.
even looking at it right.
Yeah,
Yeah.
so
Okay. Yeah. Yeah.
you would have to go to like 21, late 21, start of 22 for that to even make sense.
Gotcha.
And then
Yeah.
you were 400. I mean, it's not a double top, but it was literally close to this high, and then we checked back down to $100. Um, so
Yeah.
yeah, that math is wrong. But I get their point. I don't want to nitpick on that too much. But the reason I'm even saying that is Twitter is so fucking lazy that they won't even actually go look what it was 5 years ago and just kind of pull it out their ass.
Right. Yeah. Absolutely.
Okay, Piton, where were you at? Sorry.
Oh yeah. So the it's one of the things I really like about Twitter is just the kind of gauging the sentiment. And I say it all the time that when a stock or a sector becomes a huge punchline, um, and that matches up with like a flow look that I like. That's worked out really well for us, and I kind of expect that to continue. And I see. I mean, crypto is a good example. Now, with crypto, these cycles happen quickly, where I mean, you get the real despair, and and then things tend to bounce after that. So that more than anything, is what Twitter's useful for to me. It's not like a stock hitting its COVID anchored VWAP or any of that crap they put on there. But yeah, I mean stuff people hate, when the flow lines up. I do tend to gravitate towards those things.
Yeah, and I think knowing what you're trading, I mean, in the Mara is a great example. You were, I kind of beat you up for months, and then we finally got down to like, it was like $3, and I was like, all right, well, if you can give me something over sixes, and you were like, no, I got like 15s. Um,
Yeah, yeah.
so I was like, all right, well then if we hold six, and then we took that trade from there, and just like a few weeks ago, you're still kind of talking crypto. And I specifically said, we can trade Mara, but it's going to have to reject, and it's probably going to be 11 to 15. Well, in the words of the great Joe Biden, it was 12 to 16. I'm sorry, it's off by a buck either way, but you have to understand that's how you're going to trade it, and you can't be like Mars going to the moon this time. And,
Yeah.
and that's something that I think we're miles ahead of people, because of how we have two separate views that you're not going to get a stock like Budweiser here where it's like, well, where are we going? Is it just 60? Well, no, the flow's changed on that. We're going to follow that. And I'm not going to throw your
Yeah.
numbers out there, but it's a substantial percent above this still. And and there's plenty of other trades that are like Mara where, all right, it's going to be tradable in phase. You're talking about it right now. In phase
Yeah.
is like that. It's where you're gonna now have a tradable range. You've done the work on the stock. You kind of know how it looks. You have some levels. You know how level 2 looks. You know how the news works with it, and it becomes a graduate trade. And trying to have like this did this before just doesn't really work
Yeah.
in this kind of market. And learning the nuances of individual plays like that, having a basket like that will really help traders out, in the long run. And it takes time to accumulate that, but take notes like Carlos, and it will happen for you. Because I mean, you just have to give yourself the time and the time in the batter's box. If we go back to the baseball analogy.
Yes. And so my, one that I trade all the time. Even as crypto has its struggles, MSTR. And so the big narrative on MSTR is that, obviously it had this huge move up. You can zoom out and, obviously went crazy from down here. But these pivots are pre-split pivots that came back. And we've talked about that. If you want to know my thoughts on that, you can subscribe. But anyway, the point here is what people focus on is the percentage down from the peak to where it's been, under 300. And I haven't really cared about that this whole time. To me, this got tradable again when it got into this zone here. And you can go back on my notes and look at it. And then, once that broke down, you got these lower pivots, and then, here we are. You can kind of see what it's doing there. Now, this has been great for, options day trading. It's still not a spot to buy shares on it. That was 120 and 180 was where I got back in shares in it. But still, it's, it reacts well to these pivots. But all you see people focus on is this is how much it's down
From the high.
From the very top. Which was a euphoric move, news related, election euphoria, all that stuff. And it was just way ahead of its skis, and just wasn't going to sustain anything up there. But that just doesn't even matter. I mean, to me, that was where the very last bit of what I was holding from way back, on the way up, and then as it comes down, I just had to decide, what am I going to get rid of? And it's, it kind of sucks to get rid of something that you had such a great entry on, but 40% down from the top. I'm glad I did. I'll find a new spot for shares someday. It's fine. But yeah, I mean, it just it's tradable on these levels, and it just demonstrates to me that there are a lot of different ways to look at stocks. And I think the problem people have is they want to be a trader, but they're looking at they're buying weekly options and thinking in a weekly chart narrative. You know what I mean? Like the time frame they're thinking about is way too big for what they're buying, and they're living and dying day to day. But they're not studying and understanding what a stock actually does day to day or week to week, etc.
First thing I want to point out here is your chart on MSTR and my chart on MSTR. I got two lines. and, and,
Yeah.
and the
Right.
Professor Purple line, this line's purple for a reason if you follow us or you're in the room. I don't put purple lines on there unless I make them purple because they're off of your thesis. They're not off of a historical volume profile. And that was a target you had, and it hit it,
Yeah.
and it rejected it. But it was the overall thesis from those early entries that we were going there, and then we have my level down here, way down here on where there is some volume. So how I draw that back to the conversation is that's when I'm going to start asking about where the flow is at or where we're at. And the 460 is just what do you want to call it? It's just like where all-time high flow would be. So
Yeah.
We kind of want more mid candle. If we do make the 202 and get some stability, we're looking for things in between, and then maybe some leaps somewhere up there. This is probably a horrible example, just because of the range and the what it moves off of. But you have to look at it. That's more of a guide than a target again, because you're looking for lack of better terms, like an inside bar on a yearly candle, right? That's what we're going to be
Yeah.
looking for here. And um, you're on the second point there, like the first thing that popped in my mind is like, all right, I got to ask P, how much Roku you got left? Just to give a little,
Yeah.
a little check on it. Like, and it's the same thing. Like you should have probably reset that. And you can't call yourself a trader if you're just going to hold everything. You can't do that. I mean, like
Yeah.
you're
Right.
the point is to buy some stuff and to sell it for more, and build an account brick by brick. It's not You're not buying a block of houses by a block of houses. And I mean, there are some things you can hold on. Even if you do that, I assume you should be scaling out and keeping some free shares, which would be profit, and putting it away, and then you just kind of don't worry about it. But keeping like the
Yeah.
whole thing, or like, oh, I got such a good entry, I'm just gonna weather the storm. It's what I said in the first part. Like, if you were up 50 to 100%, you ain't took some. It's gonna suck for you because you're gonna give it all back. You can always buy more. You can fuck up your average, I guess, if that's that important to you. I mean, are you trying to say, oh, well,
Yeah.
I bought Tesla at $100. That's one for me. I bought Tesla at $100, or I bought Square at 38, and I still got them. I'm fine. Well, you're not fine.
Yeah.
You're really not.
Right.
And that, I think, that will destroy you just as much as the guys that hold and hope, like CLSK, that buy at the top. Because you're still giving back profit. You're still kind of wasting time, and you're not a trader.
Yeah.
Even the big fish. If you watch CSNBC every day, if you got that on in the background, oh, I took some off. Oh, I got all out. All I'm buying in here slowly. Like they don't just say, yeah, I bought Nvidia in 2003 and I still have the shares, and they don't do that. So you have to
Right.
understand what makes the market move. And as we always say, we kind of stole it when the whales come out, but you got to swim with the big fish. And
Yeah.
if they're taking a shit in the water instead of eating in the water, you can't be eating when they're taking a shit because it's gonna taste like
Yeah.
shit.
Yeah. Yeah. Right. And so, I mean, the answer to the question is, I don't own any Roku right
My
now.
man.
So, it, I sold on that earnings pop. I sold most of it, and then I kept the free shares until it got here. So I just, this line, I just set the line as, as my stop, and was like, I'm just gonna sell the shares here, and possibly re-enter as a new trade if it wants to establish up here. I kind of thought, I still think, Probably middle of this zone is where it's going to set back up. I don't really think it's going to go all the way back to the line, unless has a bad earnings reaction or something. But yeah,
I
yeah,
had
no, that
I
that was
had
one.
a quick test. I had 50. I
Yeah.
had some 52s, and I had my average ended up being in the mid 50s. Where do you think I was all out at? 100% out on this chart.
Um, I think probably in the 70s somewhere.
No. I was all out on. I was keeping some because of the of options. But if you go
Oh,
the because I thought we were gonna test the hunter, but if you go to the hunter test there
yeah.
towards the end, and you go back to if you go back to two, or excuse me, one more, that
Uh-huh.
90 test, I got flushed out right there off of
Oh, okay. Yeah,
yeah.
yeah.
When we went through like 85, I moved the stop loss too high up, and then I got out like at 70, maybe 78. I was all out. So I didn't
Oh,
make it all the
gotcha.
way through there, but um, a great trade, great trade.
Yeah, absolutely. And here's so the the hard lesson for me on the killer average, keep it forever kind of thing, um, was Elf, and so and I didn't have much left from that entry, but yeah, so I went ahead and got rid of it in the low 100s. What I bought back here, and so I had some under 50. I had this like 38 or something like that, and then in the 50s, that was where I found it. Pretty made this kind of crazy move up even back then. But yeah, I held it. I weathered through all this and had these pivots up here that I traded, for options or whatever. And on this breakdown, I kept what I had, and it cost me wasn't a ton of shares, but I mean that's 100 $100 a share compared to where most of my selling was. So yeah, I'm glad. I'm glad. I had a little bit of regret when it made this move back up. But here we go again. $70. And guess what? It's on my radar again,
Yeah,
and we might be talking about Elf soon. But yeah, that was one for me. And here's one more that I will maybe need to make a decision about. Spotify. Uh, I mean, that my buys were in between these two lines, and you know, really one of the best trades I've ever had, or investments, whatever. But I mean, damn, it hasn't had candles like this.
yep.
So, what's going on? Where are we going here? It's I got some decisions to make on what I got left. I'll just say that. So
There's a difference between having the full position between that full move and getting confirmation bias that I've been right this whole time versus
yeah,
getting taking
yeah,
free shares that far and then saying, all right, you know, can I allocate this money to something better? And I think if in this position on Spotify, um, if you have 20% or less of your original position, you should already be accustomed to like I've been in sell mode. I've just have it I haven't it
yeah.
hasn't met my parameters, and what are my parameters, and then maybe it's a percentage, maybe it's a spot on the chart. But like here, yeah, we're not going. For me, if I had again 20% of my position still from the 190 or whatever you have down there, I'm probably not holding them below 500 personally. That's just me. I
Yeah,
don't.
and so
Go ahead.
I did that with so when it made this move over 400, I set 400 as my level, my mental stop, right?
Yeah,
That
yeah.
if if we go back to 400, I'm just going to go ahead and get out. Now, what I didn't do on this latest move up,
Let's
that
update that
earnings follow
thesis.
through, I didn't do that again. I didn't update that idea, but it doesn't make sense to make that 400 still. So,
Yeah. Move the stop loss up always. And
yeah,
I think if you can't do that, then you are taking away a really big part of what we do and how we trade stocks is you can't re-enter. You just can't because you're stuck in
yeah,
that last trade still, and you're not going to take some free shares and buy and then buy it 4 times the amount that it was. Um, One of the Unk's old saying is when you're in it, you're a fan of it going up, but if you're not in it, like you got to be a fan of it going down. Like you got to be, and it just helps the mentality when you can be right both ways, right? Like I'm glad I sold that. Now where do I rebuy? As opposed to I'm still
yeah,
in the same trade, and it's almost like dating a chick that's toxic, right? Like you just gotta let go, let her go work on
right,
herself
right.
and come back, and maybe it might work when she's got her shit straightened out. It's a
Yeah,
horrible analogy,
yeah,
but it's the same mentality, right? Like if you just keep holding on to some bad things, everything that you've been thinking about over the same month is going to affect the trade. Is instead of just again picking spots, updating that thesis, and being like, all right, this is where I'm wrong. Being wrong early is better than just hold on and hoping. Because I mean, I even here, if you check back to 400 and it runs, let's say to 750, I don't know, pull a number out my ass. That's 100% trade you're going to be missing because you're still in the first trade.
yeah, exactly. Right. And this, if they were to split, I mean, that would really make it a lot more tradable, obviously. But yeah, yeah, I just have had several like this, and I was thinking about it as I was going through my account the other day with uh, Waste Management or Sherwin Williams Paint, and I'm not. I mean, I don't have 100 shares in this stuff or anything like that. But with what I do have, and then even that you can just sell fractional shares of these things too. I do. I start to think about that, and I posted a month ago, maybe even 6 weeks ago, that I said, we're gonna hit a moment soon where you got to make some decisions on things that you have a great entry on. What are you gonna do if it drops 10 or 15% in a week? What are you gonna do? How will you react to that? And you better think about it now. And guess what? That happened. And also, guess what? I didn't follow my own advice on a couple of them. You know what I mean? Like
Yeah.
like I didn't just go through everything I have and decide that, because some that I didn't really expect to take that kind of hit, did or are approaching that. So I spent my time this weekend going back through and trying to plan out what I'm going to do. But yeah, I mean, it feels better to know 500, I'm out, and I'm fine with that. I think that having that in your mind, then you don't have to think about it anymore, and it can set back up. And as far as me as a trader, I can trade lots of setups. I can trade all time high grind ups. I can, if I see mid candle, like if we have a few more nasty daily candles, and then I see mid candle at 550, like I know how to trade that. So I don't have to abandon these stocks. They just become something different.
Yeah, and then it's to say you had a $10,000 account or something like that, and just to make the math easy, and you got 8K in great entries, right? Like it's
Yeah.
solid entries across a couple plays, and you're trading with that $2,000, and um, you could lose more from your great entries than you can make from your 2,000 you have left, and you're gonna feel like you're
Yeah.
fucking losing. So getting the dry powder
Right.
back in these conditions and keeping it close to the vest with that 2,000 um, is a way better mental thing for you too. And that's, I mean, this is where we are. We've kind of seen it. Well, we kind of evolved it since the first of the year. I mean, my big
Yeah.
thesis was like you're gonna get killed in these bigger names, and Tesla and Nvidia have all proven, or be flat. Like you're just not gonna have a tradable range. They've all proven that, and it was focused on the B's and the C's, or them names that are not known on the street. And I mean, we're in it. We're just in it. So um, learning how to trade that again. Third time I probably said it this session, but learning how to trade that is more important because you'll be able to trade no matter the market, and it makes the uptrends a lot easier because you're moving your stop up, and it's not even coming close in the good markets, and it's healthy for you. It's not like you're gonna miss some stuff. If you perfect how to throw that curveball, you're not gonna miss some stuff. You're still gonna do fine, even though a couple you take a couple hits. And again, I posted Kramer talking about cash. Like you should just be there right now and be ready for the turn or be ready for the bigger theses. And um, about the rules, like guys on Twitter drives me flipping crazy because they have a set of rules. I'll give them that. They have a plan. They have some stock plans that they apply, but when they're wrong or when someone questions them about one of their calls, they're like, "You didn't follow these rules to the T." Well,
Yeah.
you probably didn't either. And
Right. Right.
in retrospect you can say it, and um, everyone's wrong occasionally, and that drives me crazy that they kind of like in a situation where they're usually wrong, they just refer to their rules that they're not following, because if they did follow them, some of their wins wouldn't be where they are. So it,
Yes, and that's I mean, that's big in the option thing where you follow the full life of a contract that no one would have held through what that contract actually did. Um, yes, the $20 contract went to $2,000, but it went to 600 and then 200, and then and then bounced. I mean, so you're not holding it that whole time, and so yeah, I'm totally with you there. One more related point, and then we'll get to the boring stuff. When someone has, they talk about like that a lot of my account is in this stock, and I'm worried about the setup. I've averaged down, and I'm just like, you can tell they feel a little bit trapped in it, and
trapped in the
even if it's
thesis, trapped in the thesis,
yeah,
sure.
even if it's a good thesis and it's still holding together fine, and the leaps are 100% out of the money, and the it has the news setting up to go with it and all of that. um what do you what is your reaction when you hear that comment of like, yeah, a lot of my accounts in this one? um what what goes through your mind when you hear that?
um well, usually what I notice there bullshit. Usually what I notice with those guys is they're FOMO chasers. Like they're not.
Yeah.
The thesis isn't usually early on. Um,
Mhm.
they're not. As one of my great sayings in the room for people, they're not cheaper than Unk. They're just not, and
Yeah.
that you get caught in trying to. They're FOMO chasers. Yeah, they see the euphoria around something that's moved a decent percentage, and they try to attach their credibility to that star. So yeah, it's just bullshit to me a lot of times. And then when you they just don't let go of it because they want to be right. Um, and there's more, as you say, there's more range down to be wrong than there is up to be right in a lot of those,
Yeah.
because they don't have anything
Right.
that
Right.
they're hanging on to. Like CLSK, I mean, I didn't even want to follow that because it was laughable. And I think that you're in that cycle of your career where it's so laughable, I'm going to follow it. Right? Like
Yeah.
I've seen that movie too many times. And it's like, bro, we bought CLSK at like $3 to $4. And you're up here
Right.
talking about it at like 15. Like, no. Like, no, 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 no. So I really think those guys are just full of shit, for lack of better terms. They're
Yeah.
killing people. They're killing themselves. They're not creating any skills. I mean, I don't see how you can buy something and just hold and hope like that, and you're
Well, I
creating
don't.
skills.
I honestly, the crazy thing about that one to me is, I mean, with these guys, crypto miners being their whole online identities, all they talk about. How does someone with like that end up with a six-figure average in CLSK over $15? Where were you when when this stuff was so much lower than that? I just and I haven't looked. I mean, maybe they only started posting when it was up there. And they caught crypto late and just had this idea that the government buying 1 million bitcoins is going to be great. But I mean, we've talked about that. And one more thing I'll say about crypto, and then I'll get to the boring stuff. The point you made about the thesis people have about Bitcoin now and what they pin their hopes on, is a failure of what Bitcoin was supposed to be. Decentralized, anonymous, all of that. Well, instead, you want BlackRock and the U.S. government to own most of the Bitcoin, and that's what's going to be good for you. To me, one thing that means is that this idea of repeated cycles is kind of out the window. And I felt that when the ETFs came out, that okay, Bitcoin's something different now, and that doesn't mean that I don't think it's going to go to $200,000 a coin someday. I mean, yeah, it could obviously do that, but it's not the same thing it's always been when the whole identity of the asset has so dramatically changed, and people are going to get in a lot of trouble, I think, wanting to just repeat history on crypto.
I'm old enough. I'm not that old, but I know my history well enough to know it ain't the first time that the government said, "Hey, we're gonna own something," um,
Yeah,
and it was gold. He used to actually have
right.
gold. Like you used to have gold in your pocket, and the government was like, "No, everyone give us the gold. We're gonna give you these dollars." And
Yeah,
when the government wants to own all of something, you let them. But
yeah,
the price then it can be very manipulated. Um, in
yeah,
general. So like I think we've seen this story before. Yeah, I would let them have it. I mean the Bitcoin isn't an actual substance. It's just blockchain, and it's pet rock for me. So I mean they can have it, and I would walk away. And um, I don't know. I'm just very because of the what you said about and what I've reiterated. It doesn't meet the criteria we started out with. Um, so why even mess with it? And let them have it. Let them come out with the American Eagle bald coin or whatever, and that might be ownable. But that cycle for me
yeah,
is ran dry. And will Bitcoin have range? Sure. Is it tradable? um, but again, if you're the guy up here buying it, even 70, 80, like 90, and you're going to hold and hope, that money's getting washed around for a while. And you're not going to be happy with 100%, which, I mean, if we do get to those
yeah,
bigger numbers, you're just not going to be happy with that. Um, there's better places to find entries that are never coming back. You had your chance with Bitcoin. If you bought even 2 years ago, I don't have the chart up, I think, but when it flushed to 17K, like those guys, yeah, you can hold it. But if you were buying even at 30, 40K and then all the way up here on this last run, um, yeah, be prepared to get washed around. And I don't like that the government are so involved in it. Um,
yeah.
in general, yeah, I just think I mean, it's literally a mess. Um, I'm trying to think of something to equate it to in the real world, but it's hard because Bitcoin really isn't a product. You know what I mean? It
Right.
it's just not something that I don't know. It's not something that's needed. Like, do we really need Bitcoin? I mean, we don't.
Right. Right.
We
Yeah.
don't.
Yeah. Um. All right. So just a couple updates on the boring. So I got asked, like, you know why is natural gas pulling back, and it was on this in
Yeah,
this little
big pullback.
doji candle here. So it's really not. I mean, just your 2-3% days or 4% drops, aren't really that relevant. I mean, to me, it's still just setting up for move into the $5 to $7 area, and I'm not buying a lot of natural gas stocks or anything like that, but I do think that's set up pretty well.
I forgot who. I was watching an interview this weekend. I'll get the name real quick. Um, the Qatarian president, Prime Minister Mohammed bin Abu Ram.
Mhm.
Al Tahini, the Qatar president, and he was
Yeah.
talking about natural gas being what's gonna power the future in the next like 50 years. Like it's not oil, it's
Yeah.
not anything else. He's like natural gas is where it's at. So um, I'm I'm more in love with natural gas than I ever been. From a U.S. standpoint, Trump signed a deal, um, kind of building a pipeline to Japan through the Pacific, kind of
Mm.
the same way that Nord Stream is over there from Russia to the Europe. Um, so yeah, I think the future's bright in natural gas. The, you can also liquefy it and send it that way, which he
Yeah.
talked about that process, which is very interesting. Um, yeah, and it burns cleaner than oil. So I mean, it just in
Yep.
the progression of, hate using the word because we don't know how much barrels of oil come from a dinosaur femur, but fossil fuels as they call them.
Yeah.
Um, I think it's where we go if we don't go fully nuclear, which is not a fossil fuel. But if we stay in that, we pull our energy out of the ground. Natural gas should be king, and you're gonna see the cars with it. What's up, Professor? And
Yeah. Yeah.
you're
Yeah.
gonna see you see simple things too, like hot water heaters. You're heating in your house, like that wasn't like that in the '60s and '70s. So just it being cleaner, clean energy being
Yeah.
the thing we want, I really think natural gas has a bright future. And um, yeah, if you're not on the minute chart, there's nothing to worry about in natural gas.
Yeah. Yep. Totally with you. And go to copper. Yeah, same kind of thing. Really strong up here. Just waiting to see. Yeah, I think we're gonna test 5, and um, so I think it's a good time to take a look at some of those. Some copper stocks we talk about are under some key levels or at right at them, and so I think you're set up pretty well there. Copper to me kind of already passed the test, and there's a lot of somewhat complicated geopolitical factors moving copper and all that. But yeah, so this looks pretty solid to me. A couple good places to be, and then gold. It's kind of all about setting up to test 3,000, and let's see what happens there. I think it can break out from 3,000 and go quite a bit further. Said that start of the year, so I'm still just yeah, same mode there. So just a kind of continuation of the thesis in the boring stuff. Um, Real quick on I do look at the 10-year yield. Another day I'll talk about what this is and why it matters or whatever. But this setting up to move higher uh, is not necessarily doesn't mean the market's going to go down every day, but it makes it a lot harder to hold any gains. When it does when it sets up like this, you get the pop and fade conditions. So just be careful about that.
Yeah, commodities in general. I think that's a good question to ask anyone in there that's trying to trade commodities or trade stocks that are involved in commodities. Is um, you know what first of all, like what is the application, and currently how is that going to be bullish or bearish, and um, the materials and stuff that come out of the ground that we make stuff out of, well then you're going to need a pretty good economy, or pretty good economy across the world. Like we're just not going to keep producing stuff if nobody's buying. um, and then
Yeah.
the oil kind of stands out as like its own little thing, because like we're currently talking about trying to keep oil cheap, so not commodities, so prices stay down on everything. Like we transfer your avocados, let's keep gas prices down, that'll keep the avocados down. um, Whereas opposed to natural gas is like needed. So getting the real world application, I think really helps. And then gold, like right, Gold might be like eggs here in a little bit. There's just not enough in the world, and that's like
Yeah,
is
yeah.
Fort Knox, is it in Fort Knox or not type thing, and the stuff with the London kind of moving a lot of gold around. So I think the real world application is something you really need to be thorough in commodities, and it's not super hard. So the stress currently in them isn't a big surprise to me. Um,
Yeah.
but they're like a longer thesis and a real world application thesis. This as opposed to like prices on a chart. I mean, you don't get gold earnings, right? You get it from the miners, but
Right.
they're not like, oh, gold's up this much and we found. They don't really give you all that stuff, and if they do, it doesn't move the stock as much. Um, I think you've done a great job there with teaching, including myself, the real world applications and where they're going to be implemented and how they move. So they call it boring for, or we call it boring for a reason. And if you're not willing to do your homework, yeah, the chart ain't gonna help you none.
Uh, yeah, and we're in similar conditions to what got me into oil and steel and all that to begin with. I mean, the one difference is that the rate narrative is the opposite, right? So I was all about when were we gonna stop the QE, and now it's like, are things gonna get bad enough where they start talking about quantitative easing again? And so that, as far as the Fed goes, is kind of the narrative to look for. Not in the near term, but I think definitely later this year, next year, you're going to see that start to come back. And I mean, there's a couple people, like there's people out there begging for quantitative easing now, but they're just doing it because their stocks are down. So
Yeah.
it's going to take more than that. But yeah, I mean, I think we're going to get into kind of a new chapter of the Fed coming up soon as well. So uh, we'll be on that.
Yeah, and I mean you got to definitely take what's bullish to those commodities, and we've seen it. Like we're gonna solarize America or all that stuff. You need that, and we are not in a. Our president is clipping coupons right now, and um, I mean, I think everybody knows somebody that's lost a job by now. I don't care where you are
Yeah,
politically, but everybody. If you don't, you ain't got a lot of friends. But yeah, I think in this cycle, like you just have to wait for the proper news to kick in and know how to apply that. And
well, and I'll I guess we can talk about SPY, but like I'll kind of close with this. We're running a little long, but um, when I talk about kick the can down the road, like what I mean is there's some flow set up that's very good, but they just delay it. And I've seen it in real estate a few times, and I definitely think we're at a moment where that happened in solar. And the thing about that is there are some of those cans that aren't going to get kicked down the road, that are just going to end up in the ditch. And like Nova is the example that comes to mind.
Yep.
Um, that I think's 50 cents now. So what it was, the setup that was there is gone, and you kind of forget about that one. I mean, maybe it'll do something down the line, reverse split, or if it survives or whatever. But okay, that's one less solar name to worry about. And so then, that sector, I look at it differently. Just contract my list a bit. Happened in EV too.
Yeah, I was about to say,
Yeah,
you keep
yeah,
asking me about Nikola, man. It's like, have you not been here for the whole time? Like,
yeah, 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 yeah.
or excuse me, not Nikola, Rivian. Rivian. Like,
Right,
have you
right,
not
right.
been here the whole time and followed Nikola and the rest of those things? And
Yeah,
yeah, no, I'm 100. You have to update that regularly.
right, right.
All right, let's do Spicer. Yeah, we are a little bit long in the
Yeah,
wind here.
yep.
About that 50 on the weekly. And finally there.
Yeah,
Super healthy. I mean, I think I started talking about that in like September. On
right.
this higher low, like we got to get back to this level eventually, and it's going to be healthy, and people are going to be panicking. And here we are. here we are. Still a big divergence between the two and the 50 and the 200. Um,
Mhm.
so I think even short term, like 550 is not out of the question. It's not. I don't think the pain is super done. But if we bounce off the 50 strong, short term bullish market could happen. I'm just not seeing that set up because of the geopolitical stuff. Outside of what I said like 2 weeks ago, or I asked 2 weeks ago, how bullish is a peace deal? That would be the
Yeah.
only thing for me that bounces this. If not, I do see us, you know, kind of rotate maybe one of these moves back here where we're rotating around the 50 a little bit for a while. And these are weekly candles, so you're 1, 2, 3, 4, 5, 6, 7, 8, 9. You're like 2.5 months of that kind of consolidation. Again, completely healthy, completely hard to trade. Some people
Yeah.
will probably stop trading in that environment, not for anything but financial reasons, because it,
Mhm.
it, it makes it harder after this super bullish uptrend. But it's just kind of what SPY does. If you get 25, 30% in SPY on a year as opposed to 10 or 15, you get a little bit of overcooked, and that's just kind of where we are since the 2022-ish, 23-ish, um, when we were consolidating a channel and then we broke out of that channel. So completely healthy. Definitely, they can't hide from you on the SPY side. And I think you've followed it long enough, you know what to look for. So um,
Yeah.
I like it a lot more now as a conversation than I did a couple months ago, because it's relevant again.
So the contracts that tell the story. I talked about this one a long time ago. It's all right. So the 580p in the money now for 321. The flow on it's neutral, so they're just sort of passing that back and forth. Not really directional, but just sort of an anchor for them. And then you get into some of the other 321 stuff that's still relevant. This 565 being leaning ask side, where it sells off and then they rebuy it. Um, you can see the range on the contract: $570 to $1,100. That was just on Friday, so very active, active contract there. And then below that, um, the one right below that 560 is
Hmm.
bid side. Um, so any kind of pullback we get, I could definitely see a drop of $10, $15. But I don't really know that we go much below that over the next couple weeks. So I think that selling might kind of slow down. But another one of note,
Yeah, those
not a
guys.
lot of ton of volume, but OI wise, June 545. That's a kind of new one on my radar. So as far as what they're going to roll into or whatever, um, that contract makes some sense to be relevant to me.
Oh, well, it's 610, 580. Said that for a while. Like
Yeah.
we legit left this session with just that phrase, like for a month and a half. Well, we're outside that channel now. We need to set up a new one and or
Mhm.
reclaim that channel. For me, I
Yeah.
don't make decisions on the first flush, but there's definitely like a week or two. If we don't get back to that 580, we need to set up a new channel. And how I do that usually is through a little bit of TA and a little bit of option contracts. So in my head, it's 550, 545 is really close to that. I don't know the math, but I think it's under 1%. And then you
Yeah.
kind of just establish where we're going to go. But we'll probably flush pretty hard if that's the case, um, from here. And by flush really hard, I mean like down, a $10 or $15 move down, just to establish some sort of a bottom, and then we'll be in a different channel. And that's just really how commodities, or excuse me, ETFs and SPY trades. That's like normally how they trade. They sit in a range, and that range doesn't necessarily, like, there's no difference between market makers if it's 580 or 610, or if it's 575 and 550. It's no difference. They need that tradable range. That's it. They're making microfractions off the contracts traded. They don't care what the price is. They just care about the volume more than anything.
Um,
They can make the same.
yeah.
They
And
can
that
make the
that
same amount of money on when it's 400 to 450 as they can if it's 850 to 900. They can make the same
And
money.
they
So,
need that equilibrium of
yes,
buyers and sellers. It's like
that's it.
setting lines in Vegas.
Yes, yes.
You got to get people betting on both sides.
Yeah,
And
they don't make more
so
money
that,
if it's 7 points or 15 points. They make
yeah,
money if both
exactly.
sides are being bought, and then they collect the vig. They just need equal weight so they don't lose.
Yep, exactly.
No, 100%. A lot of people don't look at it that way, but when you get into the ETFs, that is what it is. It really is.
Oh yeah, absolutely. Yep.
Perfect. So what would be your is that 545 or 550 like your because a lot of times you have that 6 month outlook, and is that what
Yeah.
it is right now?
Well, it's September 535.
Okay, so it is some downs from here. Okay, okay,
Yeah, yeah.
that's good to know. And then nothing really crazy to the upside long term, huh?
No,
It's a
the upside one died and they haven't replaced it. So it was this 620, 321. So when we were in that, we were at the top of our range. That was a contract that was the plausible upside, and they haven't really, you know, re attempted to, that they let that die, and they haven't set up something new.
yeah. So
So
whether that's
it's
600 or 590 or 580, when that pops in your filters, we'll have a little bit more clarity.
yeah, exactly. I mean, you can see for now, it's like puts dominate, and a lot of these puts are dead too, so you just ignore them. But the ones that pop up, and this is okay. So here's where I think a lot of people who read flow are kind of a little bit clueless.
Look at
Yes,
flow.
on Friday there were only 88 contracts, right? But as contracts die, there's 100,000 OI in this thing, and so they already have the starter or whatever is already there, and they go then they go from there, and then it starts to build, and then you had 60,000, 65,000 volume, 120,000 open interest. I mean, this could keep climbing, and that's how this works. That's what an OI wake up is, and I just don't think people see the early signs of that. They're just they'll filter it to what's the highest volume thing that day, and it's always going to be the zero DTE crap. But there's a bigger story happening, and I think I care more about that with SPY than the day to day.
Your verbiage is wrong, sir. They don't read flow. You're the only one I know
Oh,
that
right.
reads flow. They look at flow and make a fucking assumption, and there's a big difference between the way you
Yeah.
read flow and them just pulling a number to confirm their bias.
Yeah.
You ready to get to work?
Yeah, let's do it.
Like and subscribe. Link somewhere, people.